Okay, so plain and simple, if you're going to drive a car, you need to have insurance. At least if you're going to legally drive a car, you need to have insurance. In Illinois, you have to have liability insurance. Liability insurance protects you if you were to damage someone, damage someone's car or hurt someone if you were ever get in an accident. It doesn't cover you. It doesn't cover damage done to your vehicle. It doesn't cover any bodily damage done to you if you are at fault. So we're going to kind of talk about liability, comprehensive, and collision. If you know what those are from driver's ed classes, great. If you don't, I can give you a little bit of knowledge. I can't give you a whole lot. So what we're going to look at is the money behind it, honestly. So the way this works out, your liability insurance, it's written kind of funny. So it's two numbers separated by a slash. The first number is how much your insurance will pay out if a person is injured. The second number is how much your insurance will pay out if more than one person is injured. Now, sometimes those have a cap on it, like, up to 4 people or whatever. So this instance right here, this example, your insurance will pay out $25,000 if a single person is injured. So hospital bills, whatever. And then if there's 2 or 3 people in the car, they will pay out a max of $100,000. Okay, that's how that's written. We're going to kind of incorporate that into a table of other values. So it's going to be one of the headers. You'll see it when we get to it. Just keep that in mind. The first number is for an individual, and it is thousands, 25,000. And the second number is if there's more than one person, 100,000. So one of these is, I think it goes up to like 100/300. So obviously the more you're covered, the more you're going to have to pay. So this person would have better insurance than somebody that has 25/100. 100/300 would be $100,000 per person, $300,000 per incident, or per accident rather. Okay. The other two types of insurance that we're going to talk about, there's liability, comprehensive, and collision. Liability covers the other people, right? If someone were to get hurt. Comprehensive, if your tree falls on your car, hail damage. I've had to use a comprehensive claim when I had some hail damage to my car one time. If somebody comes up and spray paints your car just because they're being mean turds, comprehensive insurance covers that. That is stuff that you don't have control over. They sometimes call it act of God insurance. Collision insurance. If you are in a wreck, the collision insurance, if it is your fault or not, collision insurance will cover you, your vehicle. If you swerve to miss a deer and you hit a tree, well, that's going to be covered under your collision insurance. If you get in a wreck or somebody rear ends you and they don't have insurance, there's a couple of different things that could happen there. So when you're talking about comprehensive and collision insurance, you have what's called a deductible. What that means is that the insurance is requiring you to pay a certain dollar amount before they start kicking in and paying on their end. So for these examples, and just so I didn't have to give you like pages and pages and pages of information, the problems that we're going to do, they have a $50 deductible, which is incredibly low. I have like a $250 or $500 deductible, depending on which insurance it is. Okay, just keep that in mind. These are not realistic deductibles. If you have a $50 deductible, you're going to be paying out the nose for your insurance. The lower your deductible, the higher your insurance rates. Okay, so this example here, something happens to your car and you've got a $400 bill, but a $50 deductible, you have to pay $50 and the insurance is going to pay the other $350. Okay, that's just how it works. And that works for medical insurance too. If you have a deductible on your medical, you have to hit a certain dollar amount before the insurance starts paying out. But that's not what we're focused on today. Okay. So looking at what's called your premium, how much you pay for insurance a year. There's some different things to consider. There is how much insurance you want. You kind of get to decide that. Again, the more coverage you have, the more you're going to have to pay for it. If you have an older vehicle versus a newer vehicle, and honestly, how safe your car is. If you're driving something that's really highly rated as far as like the crash tests go, you're not going to have to pay as much insurance for that as you would something else. Excuse me. So the annual premium, this is what we're going to be trying to calculate. There's what's called the annual base premium. That is the coverage you want. That is what you are willing to pay for. And then there's this thing called a driver rating factor. Versus like if you're a good driver versus a bad driver, you're going to have to pay more for the same coverage as someone who is a good driver. There are several things that factor into that: your age, your sex, your marital status, previous driving offenses, like if you've had a whole bunch of tickets, or if you've wrecked 5 cars before you turned 18, you're going to be paying more for your insurance. Okay, that is a multiplier. So we're going to do all this work and find what's called the base premium. Basically, I'm going to give you a scenario. You're going to look some numbers up on a table, add them up, and you're done. Then to get your actual annual premium, you're going to multiply by your driving factor. These aren't hard problems. It's just kind of overwhelming because there's a lot of information to kind of front load in it. Okay, so we're going to look up premiums for liability, comprehensive, and collision. Add those together. Right? I'm going to give you all the information. You just have to find it. So add those 3 together. That is called your annual base premium. Then there's that driving factor. That is your multiplier to figure out your actual annual premium based on the base. Right? So this base premium would be what everybody would pay for that coverage. And then they figure out your individual premium based on your driving factor. Okay, so this table, big bunch of information, completely overwhelming. So what we're going to do is we're going to go through one little piece at a time and look this stuff up. So Della is the principal operator of her vehicle. That means she's the only one that drives it. Her driver rating factor is 2.20. We will need that at the end. Okay, we'll save that for later. Her insurance includes a $5,100 bodily injury and $50,000 property damage. So $5,100 bodily injury and then a $50,000 property damage. So we're looking at she's going to be paying $237.20 annually for her liability insurance. Okay, so here's her base. We're going to take that $237.20 and we're going to add any other coverage she has. Okay, so her vehicle is an age group A. Okay, age group A, and a rating of 13. So her vehicle is an A13 based on the age, the type, 2-door, 4-door, airbags, all that stuff kind of factors into this. $50 deductible on collision insurance. So let me move my face out of the way here. A $50 deductible on collision insurance at A13. Now, this doesn't say anything about comprehensive, so I'm not going to include that. Maybe she doesn't have comprehensive insurance, so we're just going to go with what we're given. So her liability and her collision, $287.20 added to that. So she's paying $524.40. I'm sorry, she's not paying that. That is the annual base premium for anybody with that coverage. Now, Della, she has a multiplier of 2.20. So we're going to take her annual base and multiply it by 2.20 to get her actual annual premium. So 240 times 2.20. So her annual premium is actually $1,153.70. Now, that is a year, okay? I personally, I don't do my insurance that way. I pay it monthly. What my insurance company does is they would take that dollar amount and divide it by 12, so then I'm paying whatever a month, and they add a $1 convenience fee every single month. I'm okay with that. I can scrape up $100 a month a whole lot easier than I can scrape up $1,200 in a year. Although I realize mathematically it's the same thing. All right, we're going to do one more of these. It's not hard. You just have to read and pick out the right number from the table. Okay, I'm going to copy my table over so I don't want to have to flip back and forth. Okay, I will put a copy of this table either in the assignment or I'll post it as a separate material. All right, so this example, I kind of left out some of the unimportant stuff. So bodily injury of 25,100. Here we go. So 25,100, we're going to be in this column here, right? What's going on? All right, bodily injury 25,100. So we're in that column. $100,000 property. So 233.20. Right. So her base premium is going to be 233.20. I'm going to add to that comprehensive insurance and collision insurance. C10 is her group both times. C10. So we've got $62 for comprehensive and $204 for collision. Okay, so adding those up, I just had to find three different things, right? So 233.20, 62, and 204. This person's base is 499.20. It's not bad. So to get the actual annual premium, you take the base. Again, that's what everybody would pay for that insurance, times this person's specific rating, which is 1.50. So their insurance is $748.80. Okay. Just try them. Take a shot. They're not super hard. You do have to have this table, though. I will post that for sure.